Hi, my name is Ram Dhamija. Welcome to my channel. I'm a full-time derivatives trader, investor, and a mutual fund distributor. I come here to share my thoughts about the markets, the derivative markets, and how I see the markets going ahead into the next week. And we are sitting on the 2nd to 3rd August weekend over here. And the markets are in a spot of bother. The markets have been sideways to correcting, and we are at the lower end of the range that we had made for quite some time, and it's a consolidation phase, and the markets are under a bit of a pressure, and a lot of developments are happening right now. The corporate results more or less have been out, and they have been at best average. There is a lot of geopolitical tensions that are going on, and there is a lot of tariff news that is shaking the markets a lot. So a lot of things are happening in the market. The markets were very resilient. They have been resilient till now. Post April 7th, when the tariffs got announced, after that the markets have really rebounded very well. Now I'm talking about the Indian markets over here. And they have been able to withstand all the pressure that was there. But lately what we have seen in the last, I would say 15-20 days, almost a month I would say, is that our markets have not been able to hold on to higher levels. We made higher 25,500 odd, but after that we have just been in a secular decline, and now we have reached 24,500, which is a very, very important level, and I will discuss why that is important. But we have been seeing a lot of pressure, and a lot of selling from FIIs has continued. FIIs have sold a record number again this month after 3-4 months of taking a pause. And whenever FIIs have been selling, the markets have been either sideways or they go down. It's only when the FIIs actually stop selling do our markets start to cheer. So that is there, and a lot of other things are also happening. A lot of paper is coming into the market with a lot of issuances. And typically that happens when the market is good. So the market was actually rolled back till 25,500 odd, and we saw a huge supply of paper coming in, and there have been a lot of IPOs which have hit the market, and almost like 10-15 IPOs coming every week now. So a lot of paper has been coming in, so all that supply has to be absorbed. Although the retail and mutual funds are buying a lot, but it's still the pressure is very high on the market. So I'll take you through how I see the markets and what can we expect going ahead into next week. And let us first start off with our Nifty. This is the Nifty chart. Friday was a very bad day for the markets, and post initial sideways movement of the market actually completely cracked open by the end of the day, and we closed at somewhere around 24,500. The last hour of selling was very, very brutal, and you can see that it was just not possible to do anything in this market on Friday. It just cracked. And if you look at this is the Nifty daily chart. Now what we can see over here is that we had made the high on 30th of June. That's exactly a month back, and we had made a high of 25,600 odd. From there we have this entire month of July, we have just fallen one way, and a major reason for that is the FII selling, which I think crossed 30,000-40,000 crores for the month of July. And that is very, very difficult. And there was a very, very important level. First level was 24,800 odd, where we kind of took support once, and but second and then third time also we tried, but we have broken down that. So 24,800 got broken. The next big support is 24,400. This is the low that was made on the Iran-Israel conflict news. This also now looks slightly shaky. It might not hold is what it looks like, because it's been a secular decline. And then somewhere 200-day moving average etc will also come into play. So this becomes an important level. But then the major support level, the maximum support that we can expect, is this somewhere around 23,900. This is the India-Pakistan low. The war when it broke out, this was the low that was formed. So these two levels are very, very critical for us. If these two levels don't hold, then we are looking at filling up this gap, which was made at 22,800, and then eventually the last support is 21,700. I don't think the markets are going to go that much down, because there is as of now, from whatever news flow that we have, it is not so bad that we should revisit those April lows. But having said that, the pressure is very big on the markets right now as we speak. Relentless selling by FIIs. Now let us look at the banking index. The banking index has also broken its key support at 56,100. And it is now going down again, but banking is slightly more robust than Nifty, so I'm not expecting banking to even visit its recent lows, which was somewhere over here, which is about 53,000, and even before that 55,100. I don't think we are going to even touch this. So banking is much more stronger. The results also have been much more stronger in banking, but IT is leading the pack down. So this is what you see over here. This is how much the indices are down from the 52-week highs. So banking and finance is down only minus 3.5% odd. Midcap is now crossed the 5% territory. It's at minus 6.47%. Nifty is at 6.5%. It was 3.5% some days back. Small cap is now closing in to minus 10%. So there's a correction which is brewing up in small caps now. And Nifty next is 15. So these are not good numbers. You know, they had all gone decently well, but these are not good numbers. And then comes Alpha at minus 18. Reality has cracked minus 20%. Momentum is now 22. And look at IT. IT is completely rogered at minus 25%. Minus 25% is huge for any index. Remember, this is an index, so you can imagine how much individual stocks would have fallen. It's not a pretty scenario for IT, and that is where, you know, the importance of diversification comes in. Your portfolio should be very well diversified. It should not be concentrated on one particular sector. And that is where I keep on telling people that, you know, you should maintain proper asset allocation. Now, what does asset allocation include? It includes gold, it includes fixed income, it includes diversification across small, mid and large caps, it includes diversification across factor indices and so on. So for a retail investor, this is very, very important to have proper diversification in the markets if you want to really tide over any drawdown. And also at the same time, I would like to emphasize that these are very good time periods for making your portfolio for the long run. So whenever the market gives you a good opportunity, you should utilize it and make a good portfolio out of it. And if anyone is interested, I help people build their mutual fund portfolios free of cost. So if anyone is interested, they can fill up the Google form wherein they can leave their details, and I will get back to them with how to construct a mutual fund portfolio. As I said, I am a mutual fund distributor myself, so I help clients build very good, solid, robust portfolios which are able to weather such storms quite comfortably. Simply because we focus, my main focus is always on risk. I firmly believe that if your risk is under control, then your returns will follow. So we build a portfolio in such a way that our risks are controlled, downside risks are controlled, and then we try to participate on the upside as well. So if anyone is interested, please kindly fill up that form. Now coming back to this, how the indices have performed over the last 1 month. This is how, if you see, IT is down minus 10%, media is down minus 7%, metal is down minus 5.4%. and infrastructure is down minus 4.5. So all the indices are building except for FMCG. Now FMCG was down so much. If you look at last 1 year returns, FMCG is down minus 9%. So it has bounced back from there. So you look at the daily, weekly, monthly, all three are in green for FMCG. So FMCG is kind of turning a corner, and I had spoken about it in my previous videos that FMCG valuations have become interesting. But look at this. This is the IT chart. Now you look at IT. 1 day minus 1.8, 1 week minus 2.7, 1 month minus 10.7. and 6 months minus 17%, 1 year minus 12%. So IT is not given a return for, I would say, almost last 2-3 years. IT has failed to give a return. 5 years, yes, IT has done well because this was from the COVID bottom, but otherwise IT is in big trouble. And possibly, you know, these are the times when you can actually look at building your portfolios into something that is good for you. Now let's look at the company performances over the last 1 month. This is how the Nifty stock. So Eternal is up 16%. Hindustan Lever, as I had said, has made a comeback with 10% up. ICICI Bank with very good results is up 3%. Geo Finance is up 1%. But the list of losers is so big. So look at Trend, 16% down. HCL, 15% down. This is just last 1 month return. TCS, 11% down. Bharat, it's just, the list is endless. So I won't get into the entire list. But safe to say that, you know, a lot of big stocks are down. Now, this is a very important chart. This is a mutual fund chart which shows how each of the equity classes have done. So you look at the last 3 months return, international has been the best performance. Now again, international is another place where you should be diversified in, and this is where a lot of retail folks miss out on complete diversification. They diversify across Indian asset classes only, but they miss out that mutual funds offer you also a benefit of international diversification. So you should not miss out on that. That's very, very important. So you look at international has been up 15%. US markets are doing really well. Small cap is up 10%. Mid cap is up 6% last 3 months. The ones that have not been doing so well, PSU, technology, large cap, banking, have not been doing so well. So it's also a sector rotation that keeps on happening, and you need to take full advantage of that. So this is the Indian scenario, but let's look at what is happening internationally. So US Labor Department came out with the jobless report. Unemployment rate has gone up to 4.2%. So 4.2% is, and oil falls $2 barrel on worries about OPEC plus supply plus US jobs data. So US jobs data has not been good, and unemployment has increased over there, but that basically also indicates that there is a rate cut which can come. So US stocks slump on latest tariff data, soft jobs data. So in all probability, what is being factored in now is that Fed is going to cut rates, okay, in September meeting, FOMC meeting. So that is probably going to have a good impact on the markets. Liquidity is going to improve, and it possibly can lead to a rally in the emerging markets as well. So all eyes on that. But the flip side to that is that Fed is going to cut rates because US market, jobs market is under pressure. So that could also indicate a recession along with the tariffs that are there. So it's a mixed bag, but Fed cutting rates is usually good because the inflation is under control. Indian inflation is also under control. So RBI, we have seen already has cut rates 2 times. So that is good for our equity markets. And my belief is that it is because of this liquidity that is there in the system that our markets are not falling that much. Otherwise, our markets would have been in a much more troubled spot, especially because what has happened after the US tariff announcement of 25% on India. And so it creates a pressure on a lot of sectors in the economy. So markets will react to it, and markets have been reacting to it. Though the day the announcement came, the market did not fall much, but that has also got something to do with the expiry management. And but the next day you saw Friday that markets really fell down. So bad news is a lot, but we have to also look at the good news at the same time. So US, this is the international Q. So US 30 years is doing fine at 4.8. S&P VIX has increased to 20. It was earlier 15. US 10 years at 4.2, which is absolutely fine. Nasdaq cracked big time. You can see Nasdaq cracked 2% on Friday because of the jobless report, which is not good. And I think Amazon also stock fell a lot. US dollar index has jumped back to 99. This is not good news. It has gone to 97. It's jumped back to 99, which is not good news. Oil is at 69. Which is perfectly fine for us. USD INR is 87.2 is fine. Gold also made a comeback. It's at 33.62. So you can see gold is up 2% and silver is at 37. So international Qs are fine as of now. There is nothing to worry on the international Qs, but the trouble is increasing. That is what I see. Having said that, there is always an opportunity in adversity, and if you have a structured approach to investing, then you can deploy some capital at every fall, provided you are not taking very risky bets. You're deploying your money in mutual funds. You're deploying your money in indices, ETFs, etc. That's the right way to do investing for a retail investor. Would be my 2 cents. Coming to the options part of the market, that is also very volatile. I have seen that last 4 months have not been very easy for option selling because the movement in the market is very, very high while the option premiums are very, very low. So that is also creating a lot of trouble in the market for option sellers and a lot of volatility. We saw that the volatility subsided once Jane Street got banned, but there was a news that they have started resuming trading, and I don't know, it's chance or whatever, that since from that day the volatility has increased. So option selling is also becoming a very, very tough business now. I've been an option seller myself for last many years, and since the time I turned professional in 2020, I've been consistently profitable. I would be in the top 0.1% of the profitable option traders in the country, but even for me it's very, very difficult. The last 3-4 months have been very, very tough, but that is how you test your systems and you evolve. and that is what I also constantly try to do, that I try to all my systems in such a way that there is still an edge which you have in options selling. So that's it from me now. I hope you are having a decent time in terms of the markets and investments and your portfolio. I know this is a pressure time. There will be some drop in the portfolios, but do remember that all said and done, equity markets do give a return, but they do not give a return in linear fashion, but they do end up giving better returns than any other asset class. So keep the faith, keep investing, keep buying on dips, do it in a proper way, keep investing in mutual funds. And if you need help, please fill up the Google form and I shall get back to you. And that's it from me now. I shall see you soon with another update. Take care. Bye bye. And if you like my channel, please do subscribe to it. Thank you. Take care. Bye bye.